cloud. There we go. Okay.
Oh, there you go.
There we go. So NFM lending.
Yeah.
We'll just talk about what we're seeing in the market, what you're seeing on the mortgage side of it, and what I'm seeing on the agent side. And if anybody else pops on, we'll go from there.
Cool.
So go ahead and introduce yourself. We can chat about where you're located and all that kind of stuff.
Go from there. All right. So my name is Mac. First name Mac, last name Daddion. I'm a sales manager over at NFM Lending. My group are based out of New Jersey, over in Haddonfield, New Jersey. And, we have 2 or 3 big teams working out of this office. I want to say we joined this company about 3 months ago, specifically for what we were seeing was coming. We wanted to kind of align ourselves with a company that was going to give us, technology freedom to use whatever tech we want and kind of operate our own little, let's call it P&L model mortgage company.
A little bit more flexibility with the technology.
Yeah. The boring stuff, the products, the rates, all that stuff, of course, that was better in line with what we wanted, but it was more so, technology and flexibility. So, anyone who was in the business over the past couple of years saw that 2020 and 2021, it was just record numbers. 2020, we saw interest rates go as low as 2.5% on a 30-year mortgage and 2% on a 15-year mortgage, which is like free money for all intents and purposes.
I got 2.8 on my first house.
Yeah. See, isn't that awesome? You're either never going to sell that house, turn it into an investment property. Like you probably won't even know the word refinance.
Yep. Nope.
So
that'll be mine forever.
Yeah. Oh, here we go. We got someone coming in.
Juliana is here.
So, there we go.
Yeah. So you were seeing records. So what are you seeing moving forward with the changing, like interest rates have significantly increased since, like, what are you project? And again, it's like seeing the future kind of stuff, but I know we can't do that, but what are you projecting for the end of the year? What are you seeing on your side of everything?
So macro wise, right before the 1st of 2022, like we went into the new year with a national average of about 3%, 3.1, where now the national average is anywhere from 5.5 to 6% on a 30-year mortgage. Okay. So that all happened inside of 4 months. Okay. That's not natural. That
first quarter, take a big deep breath.
Yeah. So what that did, the negative of that was obviously for banks and mortgage companies, refinances were gone. They went out the window. Okay. So you're not, maybe in the past 2 months, I had maybe 2 refinances that were renovation refinances mostly.
Wow.
Yeah. So that business is gone. Okay.
Because that was a lot of your bread and butter over the last 2 years, right?
Yeah, I mean, I was always like, my team was always purchase based. We were always maybe like 85% purchase, 15% refinance. The refinance was like, if a past client called us, we would just do it. But I wasn't advertising for refinances. I wasn't, talking to realtors and saying, hey, you got anyone who wants to refinance? I wasn't doing any of that. Because once again, I knew this time was coming. So I wanted to spend all my time, energy, and effort, building relationships with real estate agents and ensure that, those relationships are solid. So when this time comes and, everybody for all intents and purposes could potentially likely do 30, 40% less this year, depending on where the rest of the year goes, I wanted to have those solid relationships in place. So, the Fed's raised the rate. They're going to meet again in July, probably raise it again, but I think the market is a little ahead. I don't think we're going to see interest rates in the 7%, like past 7%. They'll go well into the 6s. I think there's a good chance of that, but I don't think they're going to surpass 7. And I think this is going to be this year and probably a good portion of next year. It might settle down a little bit, but I don't think we're going to see real relief for at least 3 or 4 years.
Interesting. It's interesting that you say that because, like, even though we've seen the drastic increase in the interest rates over the 4 months, myself as a single agent in my area of South Central Pennsylvania, the York area, I've been surprised that none of my buyers have stopped looking. Like, it has significantly decreased the prices of the properties that they can see, and yet we just roll with it. And like, honestly, we were already looking at that price point anyway because we were having to write over. So it's interesting to see that. Now, question for you on this. I'm just making this a question answer kind of thing. So we'll give you more accessibility here. Juliana or Linnea, feel free to jump in if you guys have any questions or want to chat about anything specific you're seeing. One of the big things that I've had a couple lenders actually come to me about, and I wanted to talk to you about, is we have been seeing a lot of cash offers. And I actually discussed this with my lender and I said, what is going on? And he's like, well, if we pre-underwrite the client and you waive the mortgage contingency because we feel comfortable that the client can afford the property and it's a pretty easy deal, waive the mortgage contingency. It looks like cash. We still throw in an appraisal in there. Or you can do an appraisal addendum. They're still required to let them in the property. And it looks better for the seller. Now, are you seeing any of that? How is that on your side of it? Because on my side, I was kind of hesitant, but I've been seeing so much of it that I was just kind of curious.
Yeah. So a couple parts to this. I'm sure people have heard, for instance, Annie Mac has a program called Cash for Keys that they keep advertising. It's all in the fine print, right? The one-page advertising sheet that they put out there, the program looks fantastic. It looks great. And, we realtors would want to push it out, but ultimately, when you really read into it, there are contingencies in a lot of those programs. So they kind of promise the world, but literally the world has to fall apart for them to have to live up to the things they promised up front. You know what I mean? So that, for instance, Annie Mac's Cash for Keys program, it does have a window once you go under contract that they have to fully underwrite the file, have an appraisal back. And if the house doesn't appraise, the client can back out. So for all intents and purposes, you're putting in a cash offer, but there is a contingency there for them to back out. I know Fairway Mortgage has some type of program where they're guaranteeing, $10,000 if the deal doesn't close. But then there's stipulations that, X, Y, and Z has to happen for it to be our fault. And then we actually pay that $10,000. So, it's more of good marketing is what it is. And it has helped companies like that just kind of, get a little more market share by putting that program out there. But I will say it's not as good as, your uncle writing you a check for $400,000 cash to buy the house. It's not the same. How we're, trying to be a little more competitive and help people win offers. And this goes without saying, I tell the agents that we work with and my team works with, you shouldn't be putting in an offer without keeping us in the loop. Absolutely. Like we need to reach out to the listing agent and talk to them as much as possible, especially in an area, highly dense populated area like this, where, our office alone with the different teams in here, we do business with so many agents in this area. There's a good chance I've worked with them before, or Ron's team, Dana's team, Mike's team has worked with them. So,
I love that you're saying that because I've listed a couple houses recently and I will tell you that I had 8 offers on one, 5 on the other. And I will tell you one lender reached out to me to talk about their client. And that was actually the one that won the deal.
Yeah.
And it was the fact that it was a confirmation of everything that happened. So you telling me that makes you go up on my scale of like where I put all my lenders and stuff.
Yeah.
So that's really nice. And without us having to ask, because I know that there are other agents or lenders that you actually have to ask, say, hey, can you call and update them? Do you guys do that, or do you just automatically reach out once you find out that we're putting in an offer?
I just automatically reach out. I tell the agents, either CC us on the offer and I'll see the email and I'll reach out, or text me the listing agent's, number. I mean, I can find the info, but if you have it, send it to me and I'll make that call out to them because like you said, you could be an identical offer to somebody else. And that deciding factor was me just reaching out and saying, hey, I've ran credit. I've collected every piece of documentation. I've ran them through underwriting. I've ran them through the automated underwriting system. Maybe I have an appraisal waiver and we don't need an appraisal on the deal. And you can just kind of build that familiarity. But then I think the other huge piece that I know a lot of lenders don't do is I try and find out from the listing agent what their concerns are. Like, why are they not going with our offer? If it's a numbers thing, it's a numbers thing. If our customer isn't where they need to be, there's that. But a lot of times I'll get in an engaging conversation with them because it's not the numbers. The numbers are where they are, but there's other things they're concerned about. Is it, it's an FHA heavy area and they're concerned about lead-based paint, or whatever the case may be. And I sometimes find the listing agent is a little more open with me versus the buyer's agent. So I can kind of be like a secret agent going in there, getting additional information and coming back and saying, hey, look, they kind of want to go with us, but here's what we have to do to win the offer. So
that's
let's
awesome.
do it.
And that's a true partnership on your side of it.
100%. And
That's awesome.
that little piece, and coming up with solutions too. So maybe their concern is, I had a deal the other day. All right. This is a perfect example of why this works, and building like this rapport with the listing agent helps. I had a deal where they were conventional, and through all our due diligence, everything, he was good to go. Okay. He had a short sale. He promised me that short sale was 7 years ago, so he would be fine with conventional. When we went under contract and he started digging for the paperwork and everything, it turns out it was 6 years ago. So now he doesn't qualify for conventional, but he does qualify for a VA loan. Okay. But the listing agent didn't want VA because they're concerned about the amendatory clause, that if it doesn't appraise, they can back out of it. So when I called him to kind of negotiate this, because the agent was actually in Disney, so I was kind of like calling and doing the negotiation. I said, look, let me figure out what the seller's concerns are. The seller's concern is, one, it's gonna underappraise. Okay. This guy was putting $200,000 down on a VA loan that requires a 0 down payment. So even if it underappraised by $199,000, he would still get the house. So just me talking that bit of information to them put them at ease. The second piece was the amendatory clause. I said, look, me as a lender, I don't need to see that. I don't need that clause. I have the contract. I'm fine. So if we can get, the customer to agree, regardless of what it appraises for, he's going to proceed forward. He's happy. And I knew this because the customer told me that, because I talked to him ahead of time. I said, look, likely they want some sort of appraisal, like confidence. So it's just like those conversations, and having those conversations help upfront and during the transaction to ensure, that offers get won and that they continue and make it to the closing table.
All goes through. And I love kind of combining. Juliana put in the chat here that she always puts in with her offers that she sends in, client is using my preferred lender and welcomes your call for any questions regarding my client's buying power. And I do that as well, and attach, but I liked what you said too about attaching the mortgage lender onto the offer email. It's like attach them onto the offer email, put that in there, and then anybody can reach out because the info is all right there. I love that kind of connection. In regards to like VA, FHA, stuff like that, something I've been doing, and I don't know if you guys, Juliana or Linnea, please step in here if you're doing something similar, is my FHA, USDA, and VA buyers right now are covering all lender required repairs. So it plugs them in there up close to that conventional. So if they can get a little bit of a twist on everything, it is. Now, how on the lending side do you feel about the buyers covering those repairs? Because I know sometimes that'll throw the financials off, the debt to income, all that kind of different, like the funds in the bank. How do you feel about that being added into contracts?
So honestly, I taught a class at the KW in Cherry Hill a couple months ago, and I actually brought it up to them that one of the ways to win an FHA offer is that's their concern. Like if they have to scrape paint on the shed and it's going to cost a painter $1,000 to go out there, I say, if you guys are comfortable, just put in a contract that up to X amount of dollars will cover it. And that works half the time. And then it becomes creative how we put the contract together. Maybe we just put the contract together that buyer will pay $2,000 of seller's closing costs. That's one way of doing it. A second way of doing it is to do an escrow holdback. And not all companies do that. There's a lot of companies, they won't allow that. But for us, if it's not really a safety concern, if there's structural issues, that has to be taken care of.
That's different. I think that's different on all aspects.
If there's a window that's not working or is cracked or there's paint somewhere, that's just basic things that's maybe going to cost a couple $1,000s. We approve escrow holdbacks. So, the buyer can either come up with the money, or depending on how the deal is going, maybe the seller covers it and the title company holds the escrow and attorney holds the escrow. But we're okay with stuff like that. So I actually encourage that if your customer has the funds and feels comfortable with doing it, I would highly recommend them covering that cost, because that's one of the main reasons why an offer is not going to be won with an FHA loan, is that. So
now, Okay, so that's good to know that that's a different way that we can get those FHA, USDA, VA offers under contract with that. Now, with the changing market and the increase, we're starting to see a little bit of a slow in regards to how many offers are per house that is out there. What are you seeing as the first thing that is being pulled back from the buy side on contracts that they're offering? Does that make sense, my question?
Ask it
like
one
I-
more. Ask it one more time. Yeah.
So what do you see as the first thing that the buyers are taking back from when they're offering the kitchen sink to sellers in regards to covering appraisal gaps, covering lender required repairs, changing offering over ask, cash offers with underwriting, stuff like that? What do you see? And it might be a little preemptive for me to say this because we haven't seen that big of a change yet. But what do you expect to be the first thing that buyers will say, no, I don't want to do that? Oh, closing, transfer tax is another one.
Yep.
Stuff like that.
I honestly think I'm seeing a lot more buyers afraid of the appraisal gap. So unfortunately, you're always going to have people that are willing to go well above asking. They're going to cover it. They don't care. But I am absolutely seeing houses starting to not appraise in certain areas. And we have our own panel here. So we don't use an AMC. So when we came on board here, all the teams brought 2 or 3 of their best appraisers that have good relationships with. So these are guys on our panel that they're going to do everything they can.
So I just want to step in there for a second.
Yeah.
That is so important.
Yeah.
And that is why the local lenders are those lenders that you want to use, because having those panels of appraisers that you can call and talk to on the mortgage side of it, that you can call and talk to and have that relationship is above and beyond, because then the appraisals are going to come in on time. They're going to come in early. You're not going to have issues with them. And you can change them if they do come in early. You can say, hey, well, this is what we did.
Yeah. I mean, like, off the books conversation, they're very, they'll pick up the phone and call us and be like, hey, maybe you should wait a week before you order the appraisal because we need a couple of houses to close. So I'm just, maybe think about doing it. It's like little things like that help. But ultimately, with our panel, if the house doesn't appraise, like, I trust them. I hop on the phone with them and it's just the value is not there. But I think we're going to see more of that. And I think what's going to start to happen is that I think the first thing to go is going to be the appraisal gap, because I'm already seeing that. I'm seeing more people throwing that out the window and be like, look, I'll offer 50K over asking, but if it's not appraising for that, I'm not buying it. So I think that's going first. And then, like you said early on in the conversation, I want to just touch on it, how you said demand hasn't really gone away. I absolutely agree with that. It hasn't. This month was a little slow lead wise, but I think overall this year, the leads have been coming in and people still have demand. But on our follow up with our database, it's the same thing every time. There's just nothing out there. There's just nothing out there. So I think until we can kind of build up this backdoor of inventory, which I think is naturally going to happen over the course of the next year and a half, simply because people were pushed out in the market with the high rates, number one. Number two, people are kind of fed up with what inventory is out there. So there's another group of people that are leaving the market. But I think you're also going to have an issue because of the historical low rates over the past 2 years. So many people, it's the most cash out refinances I've done in my entire career over the past 2 years, because people said, hey, there's nothing out there. Why don't I just renovate my house? I'll just build another, addition onto my house. I have equity in my house. So now they do that and they have an interest rate that's sub 3%. So they build that and they don't move. So those people that normally turn and burn and list their houses, they're not doing that. So I think we're going to struggle with inventory for a little bit, but I think with the rates going up, that's a factor that's going to help, keep us going, but we are not going to see a crash at all. 100%. I
100% agree with you.
Yeah.
I do not believe that a crash is imminent at all. Something to mention on that side too is I am starting within the last 2 weeks to see more short sales pop on the market. So I think the banks are starting to release that. Plus the new construction is still at a crazy speed. So I think you're right. I think it's going to be slow. It's going to be a very slow change in the market. But I think until the feds increase those interest rates again, we're still going to see the demand out there.
Well, you know what, too, something else I want to just kind of throw in there. Right now, the number one house that's foreclosed upon, the type of product, is an investor loan. So that's the number one thing to go, because you as an investor, you're like, this isn't working. I'm getting rid of it. I don't care. I'm moving on. And that's it. Now, with that happening and what we've experienced over the past 2-3 years, all us mortgage companies and banks, our rates for those loans are garbage. They're the worst they've ever been, because the secondary market that's purchasing all these loans, they don't want them. They don't want investors buying houses again. The government wants to make it more difficult for BlackRock and all the other investment banks from purchasing properties. Because you have these big investment banks, they're going down to communities in Florida, Texas, and they're scooping up 80 homes like that, just to keep in the portfolio, hold on to, and then resell. So we don't want that.
With that being said, this is the young professionals community looking at increasing our net worth and bringing in those investment properties. What do you recommend for us? If those interest rates right now are garbage, what would you recommend for us to do if we're looking into purchasing our first investment property and don't have cash for it? Or how would you go about doing something like that in this rapidly changing market?
Good question. So we have what's called non-QM, non-qualified mortgage products that we offer. At the end of the day, with investor loans, that comment I made, that's usually for kind of like the early investor. Guys who have been doing this for years and years and years, they look at it, if the numbers work, they're moving forward with it. So somebody just starting out, I like the idea of renovation loans. Okay. And we offer 15% down renovation loans. So I highly recommend finding something you can put a little money into, either live in it for a year or a multi-unit, fix it up, and then rent it out and move on to the next one. But there's a lot of great products that are low money down, like a multi-unit FHA loan. As long as you live in one of the properties, you can buy a 4-unit, rent out the other 3 properties, live in the one, and a year down the road, you don't want to live there anymore, you move out and you rent that space out. Okay. So that's going to help you get into those properties. But I think ultimately there's just this investing game, it's just becoming more and more difficult. I don't know how it is in your area, but here, like my area, South Jersey, there's not a lot out there. There's not a lot to flip. There's not a lot to buy and hold. Everything is priced high. There's just not much out there that myself, I'm venturing out to other cities, other states. But
you can come to my area. Yeah. It's like investment capital of the world. Our average sales price is about 200.
We should talk then. That's good to know. I'll be sending you a message on that.
Yeah, we see a lot of investors and stuff around here, which is why I asked too.
So here's something else like we're trying to do that I'm trying to spearhead here, is that we do like joint ventures with builders. Depending on where you're at and what area you're in, you see a lot of times with new construction builders, they either have a mortgage company or they somehow partner with a mortgage company. So what we're trying to do is create joint ventures where essentially on the back end, the builder is sharing the profitability of the loan. So it's like we're their in-house lender without them having to go out and build a mortgage company. So something like that, agents could partner up with us if they have relationships with builders and make that intro. And then it could be kind of like a trio. We lend on all the houses in that community. Okay. The builder one is happy because we're going to do a good job and make sure it gets closed. Also, they're going to share in the profitability on the back end. And then it helps out with the agent because they might be able to provide some sort of exclusive listings or, an arrangement for you to bring buyers to them.
It's also a great thing to touch on too for agents that are looking to get in that community with the builders. I have started going and talking to the builders that only have 1 lot left available. Said, hey, I want to partner with you to be able to continue your relationship with all your clients down the road. And then if I know that you have been the mortgage person on all those clients, I can reach out to you too and say, hey, I'm taking over this community, being the agent of choice moving forward with them. I would love to sit down and chat with you about all the properties and where they sit. So that's a great thing. Now, would you be open to a conversation like that? If somebody would come to you with that? Okay.
Absolutely. 100%. It would,
that's
it's worth us sitting down talking about, because at the end of the day, it becomes a joint effort for, me, you to market this community. we're doing a lot with, technology and social media in this office. Our company, we have one gentleman in one of our divisions down in Baltimore that I'm having a call with next week, that he gets hundreds of thousands of leads off TikTok. I'm not a TikTok guy. You're probably never going to find me on TikTok. I just downloaded my first TikTok, but he's doing very well. And this is like all new to him, like managing this space. And, as a finance guy too, like realtors do really well on social media. Because you guys sell the dream, you sell the beautiful houses and the neighborhood and the lifestyle. Us, it's a little different. I see some loan officers do well on social media, but a lot of times it's us just coming in front of the camera and like giving good information, which isn't bad, but it's not as sexy as, a nice house.
Like the pictures. Hey, the information's been great though.
Yeah. Awesome.
So is there anything else? I'm trying to think of something else question wise that I have for you, but we've gone over a lot here. Is there anything else that you wanted to touch on in regards to how to handle this market on our side, or what you recommend from agents?
Yeah, absolutely. I guess my overall assessment of this year, I said, I think if you just keep doing what you're doing, the demand is there, but just from sheer numbers, our inventory right now, where we are like this week, the same week 2 years ago, we had almost 60% more inventory. So it's like you could have hundreds of people coming to you to buy houses. If that's what you've been getting every single month, if you don't increase that, your market share is going to drop, by 30, 40%. So I think you need to, in my opinion, to grow maybe 20% this year, you have to talk to 50% more people. That's not easy, especially for us. Like, us, the majority of our business comes from you guys. And those relationships, it's, they're not formed by going and getting a cup of coffee from Starbucks. I actually hate doing that. I want to actually like sit down and figure out how we're going to do business. We don't need to go and get coffee. So depending on where you're at as a new agent, it might be more difficult. But me, I think this year I'm investing more in my business financially than I ever have. I'm spending money on these lead generation sources that I never had to, because I'm creating and setting up systems for the real estate teams that we work with in these CRMs that's going to funnel all this paid business into there, capture it, kind of mold the business, warm the business up, and get it ready for the agent. So we're setting up those systems and like teaching the agents how to use them. And, I think you really, if one sentence, you have to reinvest in your business this week, and don't get discouraged. It's tough, when you were going 110 miles per hour and then all of a sudden the past like couple months, it's, I come in the office and normally I have hundreds of unread emails over the past 2 years. Now, every once in a while, if I clear my emails the night before, I might have just a couple emails the next day. It's very shocking. So you have to reinvest, and you have to get out there, and you have to form these diverse partnerships with like builders and, anyone else that you can.
Got to grow the sphere. You got to get it bigger. It's interesting that you said that about the numbers and stuff, because I was just looking at our local numbers that were just sent out by our association. And for us, year over year, so I looked at last April versus this April, our inventory numbers were the same, but our houses sold were twice as much as they were this year. Days on market was exactly the same. So most of it was the same, except for how many houses were sold year over year so far, and the price point. Our price point has gone up $26,000 in a year.
Wow.
So it was kind of crazy. So I was talking to somebody else, and they're like, if you just want to stay level with what you've done and what you've been bringing in, you might be selling less houses, but you might be making more from those houses. So I thought that was an interesting, just little tidbit too, because I definitely, if you look 2 years back, it was a huge, significant difference in the amount of houses that were on the market and stuff.
Yeah.
But also the days on market was different.
Yeah. And like you said, it's every area is different. Nationally, we have an average, but we got loan officers down in like West Virginia that they haven't stopped. We have loan officers in Texas that it's just, they're still pumping out the same numbers they've been pumping out. We're here, kind of South Jersey, it's a little bit of a stalemate because we are highly densely populated, but there isn't that much inventory here. So figuring out how to maybe venture out into other markets is something you want to do as well too. But for us, it's a little easier because I can write a loan in Texas, no problem, and get paid on it. It's very difficult for you to leave PA and go and show a house in Dallas and, you know, go back and forth. So it's, you know, is what it is.
Is that where the referrals come in? So like, do you as a lender partner with people in different markets?
Yes.
So
Yeah.
like not in just your area.
Yeah.
Okay.
Yeah. Which it's, of course, it's difficult, right? Because we want to use local lenders. So when I try and venture out of our market, I tend to only venture out in markets where our company already has a name. You know what I mean? So we already have like a,
It's like
like
that
we have,
physical address.
yeah, like we have a top
Yeah.
producing team out in Colorado. My brother lives in Boulder, Colorado. So I've been doing a couple deals here or there in Colorado, and venturing out there. It's not weird because NFM has a footholding out there. So when I say NFM, they're not like, who is this? I bring it up and say, oh yeah, our office is located X, Y, and Z, this loan officer. So, but just going in some random market where NFM doesn't exist, it's just not going to work, because realtors, and I don't blame you guys, it's, you don't know who this person is or the company, and you don't want issues. You want to make sure the deal closes. So.
Okay, cool. Amazing different topics to bring up. And I think all of this is so relevant. And I think people don't take the time to slow down and actually pay attention and talk to you about what you're seeing versus what we're seeing, because what you're seeing is a little bit different than what I'm seeing. And it's showing me that it is time to, you need to collaborate, and not just with other agents, but with your preferred people that you use. So Linnea, Kevin, do you have any questions in regards to what we've discussed? We've gone over a lot of stuff.
Yeah, it was good topics.
Good conversation though. Yeah.
Yeah, we covered a lot of good stuff.
Yeah. Nothing? Okay.
Cool.
Sounds good. Well,
Awesome.
do you have anything else to say? We greatly appreciate you coming on here and chatting today. This probably wasn't what you expected, but
no, it's fun.
So
I was running late. I rushed in the office, opened up the laptop. I said, well, you know, we'll just roll with it and see where it goes. But, you know, anyone interested in like more tools, more technology, more lead generation, just reach out to me. I don't know if you want to put out a bulletin to everyone. I mean, we're doing some cool stuff and we'd like to share it with everyone, you know, just to bring some value if we can. So.
Okay, now how would, and I know we'll put it in the chat, but if somebody is just pulling this up and listening to this, say on their car and stuff, car ride, how do they reach out to you? Like, what's your email? What's your phone number?
Yeah, so I put my name and I put my cell phone number, 856-813-0475 in the chat. And I'll also put my email.
Okay.
Here as well, nfmlending.com. There we go. That's all my info.
And I know, thank you. And I know your information is going to be sent out to everybody as well. And you'll also receive everybody in the chapters. So you can reach out as well if you're interested. But it sounds like you guys are a great lending company. There we go. So his phone number is 856-813-0475. If you guys are interested in reaching out.
And like I said, I could do Jersey, PA, Florida, Colorado, Texas, some other states. If you need help in, I would probably, we do Delaware too. We do Maryland.
Okay, that was going to be my next question. Maryland, Delaware.
Yeah. Okay.
So
I lend all of those places. So if you need anything, just reach out.
Sounds good. Now, will you be attending our Red Day Talk in Hershey?
I think it's next week, right?
Yeah.
I'm going to know 100%. I'm going to know 100% for certain on Friday, and I'll confirm with you and let you know for sure.
Cool. Well, we'll look forward to seeing you there. And I think that's going to be a great event. We have quite a few people signed up for it.
Awesome.
So we're hoping that it kicks off and got some great speakers. So it'll be good.
Cool.
Anything else anybody want? But I just want to say thank you guys for stopping on. Some great information today. And any last questions? Okay.
Cool. Thank you guys.
I appreciate everybody's time, and I'll let you have about 20 minutes.
You guys.
Have a good one.
Bye-bye.
Thank you again. Bye.
Bye.